What is up, everyone? Good morning. It is February 10th, Monday. So we're starting a fresh week with yet another gap down on the Sunday overnight, as well as a rebid pushing back above the close of Friday after we got some more news. Some more tariff news out on Friday that was extending over into the weekend, right? Over the past few weeks, we've had such a case where the tariff news comes out on Friday, nukes things on Friday, and then we have a gap on the Sunday overnight before it gets rebid. So what happened I guess last week and the weekend, the talks of reciprocal tariffs was coming into play, right, from Trump. Reciprocal tariffs pretty much meaning that if a country poses tariffs on the U.S. for XYZ good, right, the U.S. is just going to counter that. And Trump is set to announce new steel and aluminum tariffs on Monday, and importers to pay 25% on top of the existing steel and aluminum tariffs. Prior metal tariffs exemptions for Mexico and Canada are still kind of unclear, and he says that he's looking to match other countries' rates with tariffs, with reciprocal tariffs pretty much. So he said on Sunday that he'll be introducing new 25% tariffs on all steel and aluminum imports to the U.S., on top of existing metal duties and other major escalations of his trade policy overhaul, and a lot of that was pretty much getting priced into a larger decline into that Sunday reopen. Surprise, surprise. There's going to be a point, I think, in the very near future that everyone takes these tariff talks in stride and aren't going to overreact the way that we've seen over the past few weeks, especially with these monstrous gap downs only to allow for the market to rebid. There's also the subject and topic of Trump wanting oil prices to go down drastically, but again, that's going to be a harder task than just implementing tariffs left, right, and center, because there are more, parties involved in that one where the uncertainty actually could bring oil prices up. But there's another thing, right? It seems that the U.S. penny appears to have been added to Trump's cost-cutting agenda by instructing the Treasury Department to stop minting these coins. Any move is likely to require an act of Congress, but support could be there this time around. Countries like Canada, Australia, and New Zealand all stopped using 1-cent pieces in the recent decades, and further arguments can be made following the years of inflation. The purpose of money is to make it easier to conduct commerce. So from that standpoint, pennies are not economically efficient. They waste a lot of time during transactions, paying or giving change, and aren't universally accepted everywhere. Vending machines, toll booths, parking meters, and so on. Perhaps the biggest argument for abolishing the penny is its production to cost is triple of what it's worth, and that's with cheaper zinc taking over as a dominant metal about 95% since 1982. So there's a nostalgic aspect, as well as arguments that price tags would be rounded up or could make sales tax difficult to calculate. The pro-penny lobby in D.C. has been funded by Artisan, the sole manufacturer of planchettes used in the production of the coin, and the company was once owned by Newell Brands, which happened to record its largest daily percentage decline this Friday, but was sold to a private equity firm, One Rock Capital Partners, in 2019. Private equity is also found on the other side of the money trail, with Apollo-owned Coinstar recycling billions of pennies each year. And there's a camp that wants to round things to the nearest zero, which would eliminate the next smallest coin in a denomination, which is the nickel. Each of these costs 13.78 cents to mint, so that could be an easy way to do away with those as well from the price perspective. However, it's been quite a while since the U.S. withdrew any low-denomination coins, and the last one to occur was in 1857, when the half cent was discontinued by Congress. So, interesting fact there. Now, overall, what's going on with these markets, right? There's tariff-driven downside that recently rallied up here pre-market, as well as a lot of news coming out this weekend. We've got inflation data, right? Starting on Wednesday pre-market with the CPI, Thursday pre-market we got the PPI, and we have Fed Chair Powell that's going to be testifying. He has a testimony, I think, twice this week. If I'm not mistaken, once tomorrow on the 11th, and I think the other is on Wednesday. Don't quote me on the second one. But Fed Chair Powell is going to be on the wire twice this week. You got a bunch of other Fed speakers that are going to be on the wire. So you have a lot of information, news that's coming out, specifically from the Fed side of things, as well as inflation data, which is a huge topic of conversation, especially with the Fed's most recent pause in interest rate changes. So something to consider as we go through this week, like volatility is most likely not going to be subdued, as we saw last week. Gap lower, rally back up, Friday news, dump it, gap on the Sunday, rebid back up. So we're at a very pivotal point right now where we're starting to really get, why does it always move? I'm not sure here. We're at a pivotal point right now where we're really starting to get a little more concerned with this upside momentum, right? There are a lot of factors to consider here, especially around the tech side of things. Big tech has been lagging a decent bit. You've got names like Google and Amazon that reported earnings last week that didn't do so hot. And right now we're continuously printing lower highs and lower lows in these equity markets without the anticipation of the expansion of the upside swing, as it looked like there might have been a broader tech rally that was coming through over the past few weeks. But these stifling events that happen every time we try to rally back up, put some downside pressure in these markets that overall, right, are still hungry for some of the upside, but they're getting subdued by a lot of the market internals that aren't necessarily chugging along. Meaning that today, I would really want to see this 60-70 area on the S&P 500 hold out so we can fill that low auction that was left on Friday and see if we can get that continuation of the upside swing. We have this very extensive, aggressive P-shaped volume profile from this overnight, and we lose that, especially under 60-70/60-67 into that area. If we lose that, we start moving into distributions to the downside, which opens up the potential for a 60-30 S&P. That cleans up a lot of the auction to the downside and really puts the bulls in a very tight situation right now, in a tight position where we continue the idea of lower lows and lower highs. So if there's going to be bullish pressure this week, like I mentioned yesterday to our team, we got to hold above that 60-10. Higher low after all that volume, and try to make that move into higher highs, right? We got to break above that 6120 very early on in the week, because again, you have inflation data that comes out, you have Fed speakers. So if a lot of these turn into actually positive events, right, that's the case for the bull side. Otherwise, if we keep failing these highs, I think that short dated puts make sense to at least hedge positions in this, as seasonality might be creeping up a little sooner than expected. So with that being said, hope everyone has a fantastic Monday and start to the week in the futures markets and the trading world, and we'll get at it ourselves. So let's open up our live trade room, and remember, check out community.tradeproacademy.com. We'll chat there, and let me know if you guys have any questions in our open Discord. So I hope everyone has a great start to the week. Happy Monday, and let's take it slow and steady, as generally with these news-driven moves and news surrounding the week, right, with Fed speakers specifically, we really got to wait for things to kind of settle down. So we'll be on that. We'll do it again tomorrow, and enjoy the day.